And thanks everybody for your patience. I appreciate your time. Please, David, move to the next slide. I'll give everyone an update on TZ and where we're at. Standard disclaimer, I won't go into that. In a basic nutshell, we are an engineering software company centered around access and control of physical spaces. And that's the core premise of what we do, and I'll explain what that actually means in a moment. So next slide, please. TZ make physical smart locking devices and software that manages large-scale environments in that space. So at its core level, we open and close lock spaces. Sounds simple, but it's actually, as I'll explain, it is complicated, and the smarts are always in the software. Next slide, please. The good news about TZ is that around 60% of our revenue comes from the US, and we have the bluest of blue chip companies. So companies like Apple, Microsoft, Google, Juniper, Cisco, Netflix. I can go on and on with the type of blue chip customers that we have, and that's a testament to the technology. To try and get your software and your technology into these big tech companies is no easy feat, and we've been able to do that and do that at scale. So it really is a testament to where our technology is at right now. Next slide, please. I'm going to go through use cases. I'm only going to pick one of those use cases, but you can see our use cases from day storage, from asset management, postal, retail. Universities is quite large for us. Health and medical, Alex, if you're still listening, is very large for us in chain of custody for large-scale health labs, first responders, and obviously data centers. Next slide, please. One of the first steps that I did when I joined TZ is because we make our own locking devices, and those devices are patented worldwide. No one has anything even close to what we have from a technology perspective. However, we still are a very small part of the overall smart locking market. And so what I did is I've opened up our whole software platform for the global smart lock vendors to come in and get access to our TZ core. And just to give an example of that, we recently won a large project at Netflix in their Silicon Valley location, and they were using someone else's smart locking technology. Software couldn't do what they needed to do. They invited us in. We showed them what we're able to do. They selected us, and now that partner who supplies other locking technologies has taken us into new and further opportunities of customers that we would never have addressed before. So opening up our software has been quite critical to the success of us growing our business quicker than we have been. Next slide, please. And this just shows our Device Connect software stack. We're getting a range of large global smart lock vendors and IoT vendors that are wanting to connect into the TZ core system, and that allows us new channels, new customers, and new revenue streams to market. Next slide, please. So at a software development level, at a product level, we are currently inundated with customer requests, and I'll explain what's driving that in a moment. We're inundated from customer requests about wanting new use cases, new changes, new features to our software platform for them to use in their businesses. And so we're scaling up our software development teams right now. I've just put in a new center in India and scale that up for a specific skill set. And at the same time, we're modularizing our software and simplifying the deployment of our software, so that as we simplify the deployment of our software, the more customers come onto our cloud, and we gain customers at greater scale. We're also modularizing our software so that therefore we can charge for features instead of entire software stacks. And so that's another piece we're doing. The other thing that we're doing is we're migrating from a perpetual license environment to a software as a service license. And that was the first thing I did when I joined a bit over a month ago. All the perpetual licenses are closed. We've discontinued for new customers. Obviously for existing customers, that's different. But we are in the process now of migrating customers from perpetual licenses into software as a service licenses. So therefore, annuity revenue streams. And we're doing that in two ways. Firstly, all functionality that gets built on our new software stack is only software as a service, and none of the new features migrate back into the perpetual license stack. So if they want new features, if customers want new features, they need to move to the new software, and ultimately we'll take our existing perpetual license software to end of life and migrate our customers over to SaaS licenses from there. The Device Connect I've already talked about, and then we're investing in our UX and UI platforms once again for ease of use, for simplicity, and once we when we get better and better at that, we find that we get more and more customers coming into our environment. Next slide, please. Sorry, I already explained this. But the existing model was perpetual licenses, one-off fees, and I'm sure most of you are aware today that what a multi-term software license, a SaaS license model is. And we'll have three models of that. One will be customers could take a 12-month software license, either paid annually in advance or quarterly in advance. They can take a 3-year license or a 5-year license. So that's how we're migrating our existing customers to a SaaS service. Next slide, please. Our device business will continue to remain in the device business, but will only develop high-value devices where we can maintain a margin of over 50%. Our software, on an annuity basis, our margin will be maintained at around 80%. So we see that these two assets that we have are high, not only recurring revenue, but high margin parts of our business for us. Next slide, please. This slide, I've split this up. This slide is our APAC business and what's happening with our annuity licenses and where we're at with our annuity licenses and the expansion that we're seeing in our pipeline. If you go to the next slide, I've separated out the US separately because it is, as I say, it's about 60% of our business. And this is something that won't be difficult for us to transition our customers to. Many of our customers invented software as a service. The US market is well tuned to software as a service, so we don't see any pushback from our customers on that. Next slide, please. These are recent software as a service sales only, so software contracts only. So Netflix, which I mentioned earlier, Apple just did a large upgrade. We just won a contract at Starbucks, CSL here in Melbourne, and Chevron for Asia Pacific. We've won a large contract with them as well. So you can see that our customer base is very blue chip customer base and a large corporate customer base. Next slide, please. Our pipeline has grown significantly, and I'd like to tell you that it was because of my genius, but actually it's because of the tailwinds that the company has seen, which I'll explain in the next few slides. But this is just an example of some of the companies that we're in negotiations with for contracts for our services. Next slide, please. And if you just go to the next slide. So you'll see we currently have a pipeline of around $90 million. And the grey area is the pipeline that we had for the same period last year. And so our pipeline has grown by about 400% over the last really 6 months, more than probably closer to 12 months. So I'll explain why that's happened and why we've got those tailwinds. Next slide, please. And that is because change is here, and the change was already happening, but it got collapsed by COVID. And let me explain the key areas that COVID collapsed the speed of how that change happened and how it's impacted our business. Firstly, e-commerce. We all know e-commerce. It is absolutely mainstream. You know, it's not going away. The more e-commerce that happens, the more business that we get from our customers. The next slide, the next is the hybrid workplace or agile workplace. And this is where we put lockers into corporate offices. And I'll give you an example. One of the examples is Westpac in Sydney. So today, if you wanted to go into, if you're a Westpac employee, you wanted to go into Westpac, you actually have to book in through their reservation system. And once you've booked in through their reservation system, you are then assigned a physical locker space where you can put your assets and keep your assets. You'll be assigned a desk, perhaps a meeting room. If you're having a meeting, you'll be assigned access in and out of the building. You'll be assigned to particular IT services. Once you're there, once you're gone, all of those services get disconnected until you come back again. And what we're seeing is our corporate customers scaling back their footprint of commercial size of businesses, of their physical spaces, but expanding it into a flexible workspace. So that Westpac example is being replicated all over the world as we see it right now. And the basic premise of that is we've all had to work from home. A portion of us will stay working from home. I don't think anyone knows what that portion is today, whether it's going to be 10%, 20%. I guess time will tell. But the people, and some obviously need to be in the office full time for whatever their tasks are and whoever they work for. But there's a high proportion of people that will only go back into the office maybe 2 days a week, 4 days a week, 4 days a month, whatever it might be. So that agile workspace and hybrid workplace is a boom business for us. Having our software integrated into all of these corporate customers is the key advantage that we have with our customers globally. The next area is contactless and asset management. And let me just give you a quick example of this. We just did a deal with Westtrac and Caterpillar. Westtrac is a big Caterpillar dealer. They're the largest Caterpillar dealer in the Southern Hemisphere. And we all know Caterpillar because they make big machines for mines and construction and what have you. We work with them to take all of their spare parts that a human can pick up. So obviously they have spare parts that are very large and no human can actually pick up and take away. And we put in a process where their customers can go onto their app, buy whatever parts they need. Maybe it's a broken part, maybe it's a maintenance scheduled part. And they're distributing physical lock spaces, lockers and big caged areas across the country where their customers can say, I need this part. And it goes into the Caterpillar system, the order gets processed, stock gets allocated, the stock gets shipped to wherever the closest location is for them. And then the end customer can go and collect their part whenever they want to, at whatever time they want to. So it really is about A, contactless, and B, being able to manage assets. So therefore, Caterpillar and Westtrac can invoice that customer when the goods have gone, collect the money, whatever it might be. Obviously, the devices that we use in there, we also use IoT devices in there for measuring and monitoring a range of different environmental issues. So we're doing that. So I use that as an example as click and collect on an industrial scale. John Deere is another company that we've just signed up in the US. for very similar parts distribution and easy access from a contactless basis. You can take that contactless view all the way down to retail and see the use cases that can apply for us. We have customers doing contactless inside corporations for managing broken IT assets, or we have the largest chip manufacturer in the world doing it for quality control of measuring the quality of their products. As I say, we've got it in medical areas as well. And the last important piece is to be able to do this in a highly secure fashion so that you have a chain of custody that can be guaranteed and secured. And you don't get into Apple's IT infrastructure or Microsoft's or Netflix, for that example, if you don't have world-class software and technology that is highly secure. So they're the things that are driving our business, and the reason that our pipeline has expanded substantially over the last 12 months, and the areas that we're focusing on. Next slide, please. So the core areas for us in our growth is the functionality that we're adding to our existing software platform with all the use cases that our customers demand from us. We're making it simpler for customers to use and simpler for companies to operate as well. And then we've changed our business model from one-time license fees to annuity license fees. And that really kicked in about 4 weeks ago. So that's the areas that I'm focused on and what we're doing as a business. Next slide, please. And David, back to you.
Thanks, Mario. A great presentation. Just a quick one. You've talked about the changing nature of the business model and your contractual terms. What sort of reaction have you had from customers? And is it sort of a case of, look, guys, you've got it in the system now and it's too hard for you to change, so these are our new contractual terms and that's what it is?
Well, for new customers, it's not a problem, right? They get it. For existing customers, we really haven't had much pushback yet. But then again, we've only been at it for a bit over a month, right? Maybe about 6 weeks now. So I haven't seen any major pushback yet, remembering that most of our business sits in the US and they are very accustomed to this. And so when you say, well, yeah, we'll develop new features, but it's going to be over here on this on this SaaS platform in our cloud, eventually they come around. So we haven't had that much of an issue yet.
Now, talking about features, obviously COVID and the environment and supply chains, work from home, all of those things are our new normal, regardless of what COVID or restrictions lifting in the future may give. But that is our new normal. Have customers asked for new features, new add-ons that maybe you hadn't thought about that will become part of the new product suite?
Yeah, look, we're getting asked for the craziest of things. And let me give you one example. In the US, fast food chain, can't tell you who it is, but fast food chain, global organization. We all know that the last mile service for Uber Eats or Menulog or what have you works very well. You order your Uber Eats, and as long as the Uber Eats guy doesn't eat your food by the time he gets it to you, he gets it to you. But actually, the back end of that process is broken. And what I mean by that is the Uber Eats guy goes into the fast food store. He has to actually go inside, grab the Uber Eats order or orders, and then has to deliver it. So what we're doing with a partner is we're putting hot and cold physical spaces on the outside of these fast food chain stores. We've just about finished the trial on it, so that the fast food company can put their hot food in one locker space, cold drinks in the other. The Uber guy shows up. He's got his QR code with his PIN number. He knows he can go to this space. He can't stuff it up because that's what happens. Sometimes they take the wrong order, and you get delivered the wrong food. So there can't be a screw up of that. but also then the fast food company knows it's been delivered. There's no argument about whether it was taken or not. And also they know how long the food has been in that warm locker, because after whatever their time frame is, it needs to be replaced, right? Right now they can't really measure that. So that I find one of the interesting ones that's come out for us. But it is this whole, I mean, we all know the supply chain is currently broken around the world. But what's also happening is this all of COVID has completely disrupted the logistics. So logistics works. It's been an industry that's been pretty much the same for probably 40 years. But it is completely getting revolutionised right now. And we are a part of that.
Now, obviously, I'm not asking you to give a forecast, but you talk to a pipeline. What degree of comfort do you have in terms of the ability for that pipeline to drop into contracted revenues? Yeah,
good question. If I look at history, we typically close around 40% of what's sitting in our pipeline, but I'm getting more, basically, I'm getting tighter about what gets in that pipeline, and that will increase I'm hoping to get a close rate of over 50% in that pipeline coming into the new year. But traditionally right now it's around 40% of the pipeline. But I'm hoping to up that up through a number of different methods.
And lastly, when you bring a group in like Netflix or Westpac, I assume they come in at sort of a certain level to test the system and make sure it works and delivers. But how have you seen historically growth within a brand once you've contracted a brand?
Yeah, look, I think there's it's really interesting. And TZ's been around for a while, but I think in some ways TZ was ahead of its time, right? And it had a market, but the market was small. And but now, with what COVID's done to us all, it has accelerated that up now, whereas people are saying, okay, I want to put it in this particular office, and now I want to scale it around the world. We haven't had much of that, in the past 5 years, but we're now seeing a company like Microsoft, for example, that's saying, okay, here's the roadmap of when you're going to deploy these across these offices around the world, right? So history doesn't show that, but future points to showing that right now.
Are there any, all businesses at the moment who are trying to scale globally have breaks in terms of their ability to deploy units or deploy? Are you seeing any issues there in terms of the manpower required to deploy?
In some cases, yes, we do. But we've got a pretty good network of installers and people who deploy all that stuff. And we get, and I'm intentionally moving the business out of that part of the deployment phase where we'll say, here's the software, here's all the devices, here's the electronics, because we've got a bunch of electronics as well. And you guys fit it into your office the best way you want. So, for example, Apple does all its own, in typical Apple fashion, they do it all. They just take all of our electronics, our software, our locks, and do the rest themselves, right? Which is fine by us. And so it's a mixed bag right now. But we are seeing, human resource constraints in different parts of the world, absolutely.